You are about to find out the key levels for T-Mobile, ticker T. Now, it is down 4% today. Why is it doing this sort of move? So, the main reason it seems is that you had Citigroup downgrade this stock. So now their price target has changed from $22 down to $16. I think we also saw the same thing on Friday. But again, we are still trading below what they're making these price targets. So again, if you pay attention to price targets, that shouldn't matter all that much. But again, we will go over the key levels which we're at least paying attention to. So what I'm paying attention to on T-Mobile is right now we've gapped below $14.25. So it wouldn't be unlikely to see us kind of retest this level as a resistance, because this is a second deviation. You do tend to retest these levels even if you do continue down. So I would be watching for a move to that, especially if we can get it today. Could be quite a nice short play because you have the anchored VWAP quite close to that as well. But if we do continue down, then at $13.35, this would be a long bias area. If we break lower, you have $12.75 and $11.90. So these are the key three supports if we continue to the downside and you're looking to take the stock long bias. Again, $13.30, this is our second deviation on the 6 month. You have $12.75, this is our third deviation on the 1 year. And at $11.90, you have our third deviation from the 6 month. Again, all three are key supports. The best levels and the strongest levels are always going to be these green ones. These are our third deviations. These are always going to be the strongest. So if you want the highest probability trade, you could potentially wait for a potential pullback all the way down to $12.75, then potentially look to take it long bias. So that's what I'm looking at from a support side. Now, again, these could be levels where you maybe add into the short, or you just take in profits if you're already long, and that would be looking at the levels above. So again, this 14.25 second deviation on the 1 year. Again, if you're already long some stock, could be an area to maybe take some profits. If you're down on the position quite bad, maybe an area to take out or maybe potentially stop out. If we start to break that though, we have 14.80 and 15.75 as key levels if we continue up. Again, if you think the stock's going to continue down, which does seem to be the signs from the 6 month chart, the 1 year chart, you're seeing downgrades left, right and center. It is showing to be quite weak. So if you want to play this downside momentum, then retesting any of these levels to the upside could be ideal areas to potentially start getting in short and trade it to the downside. I hope you guys enjoyed the video. If you did, why don't you check out this video, because you'll probably enjoy that one too.